this video, I will be going over an ICT strategy that I use every day inside of the markets to catch trades like this. First, we must go over the main components of this strategy. So the first rule is a higher time frame order block. This can be on our 15-minute, our 1 hour, or our 4-hour time frame. If you trade SMC, order blocks are basically the same thing as supply and demand. Next, we need an available liquidity pool. This is our London low or high, since we're trading New York session. And then, lastly, we must be within the first hour of the open. This provides a key time window where price is more than likely going to take out one of these liquidity pools. Right here, we're going to hop on the charts and I'm going to show you guys an example that I took this trade on Friday, September 6th on my top step challenge, and I caught basically the whole entire move down. Before all this happened, let me take it back. What do we have here? Right here, we have an order block that was created on the 15-minute time frame. So since we see that this is London low, liquidity has not been taken out yet, we continue to wait until New York session opens. Now, if you guys are having trouble knowing what time sessions open, an indicator that I use is just sessions. So you would just go to indicators and type in sessions. So right here in the little lighter yellow, we can see that London session just stopped at 7. The last London candlestick was at 7:45. We draw London low right here, and we can see that during NY session, which is just now opening at 8 o'clock, we see that London low has not been taken out yet. NY session on YM opens up at 8 o'clock, but we don't trade until 8:30 because that's when Wall Street opens, and that's when the most volatility enters inside of the markets. So we can see that price is being, right now it's 8 o'clock, we can see price is being attracted towards this order block that has a gap to fill. So we wait, 8:30 happens, we push into this order block, and then we reject and we target London low liquidity. So from 8:30 until 9:30, this is a key time window. We're taking our trades based off of time. So after we reject from the zone, we target London low liquidity, and then price literally melts down to that liquidity. Other key components that are very important, smaller components that are important when trading this strategy, is higher time frame order flow. Have to make sure that we are in line with the higher time frame as well if you want the highest probability of success. So that's one of the examples of this strategy. Now let me go to gold, which is another trade that I took the other day. So on gold, as you can see, NY session does not open at 8:30 or 8 o'clock. It opens at 7. So I would be looking for price to sweep at that key time window from 7 to 8. So at 7 o'clock directly, we see a push right here. I got inside of this trade as well. A push that fills in this order block. Price rejects after wicking the zone. So right there, risk to reward right there, my stop loss right above there. Then I'd aim all the way down here towards liquidity for price to come back down, and then it melts and sweeps liquidity. The opening time for each asset provides immense volatility, and price literally has one objective on intraday time frames, which is where's liquidity sitting at, where are gaps to be filled at, and price will literally fill in a gap and then draw towards liquidity, or take out liquidity and draw towards more liquidity. Now the last example I'm going to show you guys happening, if you guys are watching this when this comes out, there was a trade that just happened yesterday on NQ where this literally played out, but I didn't get inside of it. So here we have a higher time frame zone on the 1 hour, Now I marked off this trade, but I did not get into it because I was looking at YM. So we have this higher time frame order block, and we have this gap that needs to be filled. So we come up, fill in the gap exactly at 9 o'clock, which is still within our key time window. And then as you guys can see, as soon as we fill it in, we have our London low that has not been taken out yet. Price draws towards that London low, and price takes it out smoothly. So for me, London low is always an important key liquidity pool that most of the time London low, London high during New York session is taken out. It's just where I add in these other confluences that make it more high probability for me. So those are the key components of this strategy. Just remember, you have to wait until the opening, a higher time frame order block, or supply and demand. And then we have to have our time and session-based liquidity pool that's available. If you keep these things in mind and keep it absolutely simple like this, I guarantee your win rate and also your risk to reward is definitely bound to improve. Alright, that's it for this video. And if you guys want me to go more in depth, especially how I get my entries on the 1 minute, I'll be going over that in another video. So I hope you guys enjoyed, and see you guys next time.